Hello traders. Today is the 7th of June 2011, and happy trading to you all. London is still open. New York is not yet open. Exactly in 12 minutes time, New York will be open. As you can see, the time in London is 18 minutes past 2 p.m. in New York, and 18 minutes past 9 a.m. Eastern time. Okay. Now, as always, we pay attention to the opening bell. That's very important for us, okay? So we will respect the opening bell, okay? London did open exactly here, okay, at 8 a.m. London time, which is 3 a.m. Eastern time. So most of the Americans are sleeping, okay, unless you are a serious trader, okay, and getting up on time to catch the move. But the Asia session has been busy for the Euro USD currency pair, as you can see, and we have here a clear-cut market pattern. The price went down. That's the first thing that we are checking. The market pattern will control the price pattern. Okay, so the price went down in this session here, and then we have a double bottom pattern here. A double bottom is a kind of a consolidation. Why? Because we have equal, okay, influence of the bulls and the bear. Okay, that's how you define a pause period or a consolidation period. The influence of traders that are buying and the influence of traders that are selling, okay, become equal. Okay, very important. So you will pay attention to that. Okay, another way that you can recognize the consolidation period, you can perfectly see that a lot of moving averages coming together. Okay, they will be coming together and squeezed together and in horizontal position. The third way to recognize the consolidation period is that you will see the Bollinger Band itself. Okay, the Bollinger Band will be coming together and squeezed together. Okay, and will be very close to together, and the Bollinger Band will be squeezed, not open. Repeat, not open. Okay. But there is another pattern regarding the consolidation period that usually will fool traders. You will see the Bollinger Band wide open, okay, and but the price will be consolidating. Why? Because the price itself is the #1 indicator, the ball. That's what we are watching. So the Bollinger Band still open, wide open, okay, which means previously, before there was a volatility, which means the price was trending. Suppose here the price was trending up, okay, and the Bollinger Band was wide open, okay. So, but by the time the price started consolidating, okay, but the Bollinger Band did not have enough time, okay, to squeeze, to come back together, okay, to adjust itself, to reset itself. So you will see that the Bollinger Band is a bit late compared to the price. When you see that the price itself, the #1 indicator, is consolidated, you will see the price going in a range, in a horizontal, but the Bollinger Band is still open. This, you can see that very often when you have a huge move, which means the Bollinger Band is widely open, okay, because of the huge volatility, but the Bollinger Band is late to reset itself when the price it was consolidating, which means you see the size of the candle very small, and the price itself is going in horizontal direction. Those who always draw on their chart will always recognize, okay, the consolidation period. This is a small consolidation session here. You see the price is going horizontal here, and you see here, if you are drawing on your chart constantly, you cannot miss it. But the double bottom pattern, some traders perfectly disagree with me in that time, in this session. Whenever I say that there is a double bottom is a kind of consolidation, some traders disagree with me. Why do they disagree? Now, they have their view, but what I'm saying is that the price trend, which means down here, you see, the bear were perfectly in charge of the movement to the downside, okay, but they try to bring it up, okay. Now the bulls take control here, okay. The bull take control and bring the price up here, okay. Now the bear start again to take control to bring it down, okay. So the bull took control, okay. The bear took control. They failed to display a new a lower low, okay, and they the bull take again over. So there is an equal influence, okay, in this session here, okay. The price here until it break this zone here where I place my horizontal line. Okay, so you see if you draw line here, because first the price was going down in this session, the bear were perfectly in charge, but in this zone here where we have the double bottom pattern, the bear were not in charge and the bull were not in charge either. Okay, so that's why, especially on the weekly chart, is a consolidation pattern, and some traders get in trouble with that. Okay, and they get I mean they make a wrong decision. Okay, but what I'm going to do now, you see this session here, from here to here, that's why we are talking about the consolidation period. Now we want to talk about Elliott Wave, okay, because the Elliott Wave theory, okay, I can assure you, if you want to trade, if you want to remain a trader, the sooner you start learning about the Elliott Wave theory, the better. Okay, you can perfectly trade, okay, all your life without using Elliott Wave theory. That's possible, but understanding the Elliott Wave theory is too important, okay, to ignore. Okay, it's too important to ignore. Okay, or it's too important to disregard. Very important. Okay, in fact, I consider those who disregard Elliott Wave as an insult, okay, to the market. Now that's my personal view. Okay, now very important subject, and few traders understand how to use the Elliott Wave theory. The Elliott Wave theory is used together with what we call the market patterns. Okay, the market patterns: trend, post trend, imbalance, a balance period, and imbalance. You will see those who use the market profile. Okay, we'll talk about balance, imbalance. Okay, and imbalance again. Okay, this is what we call the market patterns. Okay, trend, pause, trend. Same story over and over. Now here we see that the knot is broken, as I like to call it, this section here of the double bottom pattern. This, the knot is broken here bullishly. You see the bullish candle, this two candle here, the bullish one took it over and the price ran off. Okay, now you can see that from the bottom here, traders were buying because of the consolidation, so price went from here, hit this level, come back to the same level. This is a typical consolidation. That's what I'm talking about. So the trader took it again from the same defined support level here, bringing near the defined resistance level. That's what I'm talking about here. Some traders start selling here. You see, they start selling again because the price was approaching the defined resistance level according to the rules of consolidation trading. Okay, but look what's happened. The bull quickly took over. Those who were selling here, the bull take control fast and bring it out. This is the first Elliott Wave, from here all the way up here. Okay, now I consider myself a serious person regarding the Elliott Wave theory, so he took it from here all the way up here, not from here. Okay, so they took it from here all the way up here out of the box. This is the first Elliott Wave, from here all the way up here. Okay, if for instance, okay, you see here, if this movement from here, okay, was not stopped with this retracement to the downside, repeat, if this movement from here was not stopped by this retracement to the downside, the whole first wave will be from here all the way up here. But because of the consolidation trading pattern in this session here, you can see that when traders, okay, when the bull took control from the bear, because the bear brought it from down to this level, when the bull took control, they tried to bring it here. Okay, they were interrupted. Okay, they were stopped by the bear, which means they sold them down here. This is within the boundary of the consolidation session here, as you can see here. Okay, but if the bear did not try to stop them, if we did not have this retracement here, the whole first Elliott Wave will be from here out of the box, because sometimes you see the bull take control and no one dare to challenge them, and they try and bring it completely out of the box, out of the consolidation section. So in that case, the whole movement will be the first Elliott Wave. There is a video that, not a video, my apology, there is an article that we posted I think either on Hub Pages or Squidoo about how to recognize the first Elliott waves. Okay, so you can go and check that Hub Pages or Squidoo, how to recognize the first Elliott wave article written by myself. Okay, so now, so the first Elliott wave from here to here, and the second Elliott wave from here to here, a very short-lived the second Elliott wave, which is in fact a consolidation, because the price went down to this level, because we are looking on this lower time frame of 10 minutes, so you can perfectly accept that. Not much, because that's what I'm talking about. The euro is manipulated towards the upside. People are buying. I don't know who are these people, but there is a group of traders perfectly buying the euro non-stop, and the ECB want a strong euro. So be aware of that. You can perfectly take advantage of that. Do not worry about it. Okay, so you know because the price does not hide anything. Okay, the price does not hide anything. If a financial instrument is manipulated, it's clearly visible to traders. Traders are aware of it. So if you know which direction they want it to go, so you give priority to that direction. So we know they want the euro to go up. So bullish signal received during the uptrend. Excellent. You see how they bring it fast? Tall candle, tall candle, tall candle, tall candle. Okay, so it's not something to worry about. So you can perfectly take advantage of that. Okay, now the New York is now open with my blah 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 blah. So we have to go now and talk about serious business. So first Elliott wave from here to this level here, second Elliott wave down to this level here, in fact down to this level here, kind of consolidation, and the third Elliott wave from here to this level here, and the fourth Elliott wave from here to here. Okay, the fifth Elliott wave has ended right here. We are watching again the knot of this double top. This is the knot of the double top. This is the knot of double bottom. Okay, this knot must be broken. So we have a double top here. Okay, after a 5 Elliott wave. What do you ask for? Okay, but now this is to look for opportunity to sell the euro. So we are trading against the ECB bank. We are trading against the German government. So you need to be very careful. Do not be surprised to see the euro turning direction and rushing to the other side. Okay, so because every support level there are people buying the euro. So when you are selling the euro, be very very careful in this session here. So if the best strategy to sell the euro at this point after the 5 Elliott wave, the market is considered as overbought, but it's one thing to be considered as overbought and another thing to be accepted as overbought. So what we do now, a double top, is a kind of consolidation session again. So we highlight our session again. You see the same thing we see here at the bottom here. Okay, so the same thing we will do in this at the top again here, as New York has just opened. Okay, so this is what we are talking about. Okay, so now you see this is about selling the euro. You have to be very careful, because you are trading against the ECB and you are trading against the German government. Okay, so guten Tag, guten Morgen to our German friend. So this is it. The Europeans want a strong euro. Okay, so that's it. Okay, while the Americans were, the American government, the Fed won a weak dollar. Okay, now I think it's time for the Fed to do something about the dollar, because it gets a bit too much now. The selling is too boring now. Okay, it's no more exciting anymore. Okay, now so the Fed won a weak dollar, the ECB won a strong euro. Okay, this was happened. This is about what you hear in the paper sometime or in the news, people talking about currency war. Is taking place. Believe me, it's taking place right now, and we see it, and you can perfectly position yourself and know what is likely to take place. Okay, so 5 Elliott wave from here to this level here, second Elliott wave from here to this level here, and the third Elliott wave, usually the longest, repeat, usually the longest. During market distortion or abnormal condition, you may see something that is completely different to the theory of the third Elliott wave being the longest. In this case, we have the longest from up to this level here, and the fourth Elliott wave down to this level here, and the fifth Elliott wave has ended here. Now, the 5 wave is completed now at this point in time where I place my cursor. We will expect a kind of if the ECB want the euro to go down, that's perfectly okay, because after the fifth Elliott wave, the price can resume a new trend to the upside. That's what we call continuation pattern. So the price may go up and down here, and then run off again and break this level and continue the movement to the upside. Instead of breaking the nut here and bring the price down, the price can perfectly break this level and continue the movement upside. In that case, we will use the Fibonacci extension and Fibonacci projection to locate our zone of a 238% Fibonacci extension zone, and especially the overbought zone of the Fibonacci of 261% Fibonacci extension zone, and the ultimate egregious target is the 300% zone, projection zone of the whole move. Okay, so what are we going to do now? We will draw on this chart, okay, the Fibonacci, because our first Elliott wave has started here. Okay, so we are going to draw the Fibonacci retracement level of the whole trend, okay, from here all the way to where our first Elliott wave has started from, which is here, this level here. And we want to know, because the theory, so we are aware of the theory, this is one thing. So the reality of the market is different. Okay, the reality of the market is completely different to the theory. That's where traders get into trouble. They go and read about the stochastic, they read about the RSI, they read about the MACD, and they try to use, okay, the theory that they have read in the reality of the market is completely wrong. The same thing when we say to traders, when you are trading a trading system is not a trading robot. Okay, that's why you have to know how to trade. That's what we are working with. That's what we are doing here. So the theory, forget about the theory. The theory is just there to guide you. So the theory says that after the 5 Elliott wave, after the 5th Elliott wave, okay, the market will retrace back to the market will give the ABC corrective move. Okay, so something like this, ABC corrective move, price come down, which means breaking the nut here. Okay, breaking the nut here. So price break the nut, okay, price retrace the nut, retrace to retest the nut, and price come down. So we are expecting something like this, price breaking this horizontal line, break it down, okay, retest this level, okay, and bring it down in a zone of 50% and a 61.8% Fibonacci retracement level. Okay, so some traders will place orders already here, okay, in the middle line of 50% or 61.8% Fibonacci retracement level in the zone of 14622 for the Euro USD, 14622 to look for opportunity, okay, to buy already. That's their strategy. So they will place order here to buy already, waiting for the price to come down. So okay, so this is the theory and the reality of the market. At my trading style, or what we are trying to tell the TSTW 24 traders, the TSTWSY 08 traders, the TSTWSY 008 traders, is that yes, be aware of the theory, but keep your eyes on the ball. Because when you keep your eyes on the price itself, the number one indicator, okay, you will miss anything. Everything will become clear to you. You see here, the price was in the channel. That's what we say to you. The price is always in the channel. Always. Either the channel is rising or the channel is horizontal. Okay? So this is it. The channel here, we move from a rising channel. We are now in what we call horizontal channel for now, as New York just opens. Okay? So you see the market is a bit quiet, as I told you. If the euro was about to go up, you see, you start going up very, very fast, very, very fast. No delays. But if the price is going to go down, it will go down very small, very slowly, slow, dripping, 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 dripping. You may as well completely stay away from the euro when you see a sell signal and look for another financial instrument that you can perfectly sell. Okay, it's a waste of time, really waste of time. This currency pair is a heavily manipulated currency pair, as I'm telling you right now. So watch it. Why the ECB is so anxious? Because you know, there are some traders that are really up for it to sell the euro big time because of the sovereign debt in Ireland, in Portugal, in Spain. And the reality is that at one point the euro will face the reality. Open the books, tell the truth, bring the euro to the fair value. That's what we said. Do not lie to the people. Now, politics, politics is involved here. That's what we are talking about. The politicians are involved in the market right now. That's what makes trading a bit dodgy. Okay, so be aware of it, especially if you are trading currency. This happens. So these are not like somebody a stock somewhere you are trading. You are dealing with a continent, a currency. So it's not going to be just open market. You do whatever you like. So this is what we see. Now, again, looking at the price itself, the number one indicator, what do we see? The price was the fourth Elliott Wave was a gorgeous channel. Okay, so this is what we are talking about. Okay, let me remove the dodgy one here. Now, dodgy is a word we use in London a lot, so if you think it's a bad word, my apology for that. Alright, okay, now okay, so this is what we see now. Okay, so we leave it like this for now, and yeah, that's what I'm saying. The euro will go up. Okay, so let's create a room for the euro if you want to go up. So what I'm doing here is not to just for the pleasure of drawing. It's just to get traders into this habit of drawing. Okay, that's my intention. By draw, I don't draw all the time on my chart like this. Sometimes I do, but I'm doing this in front of you to get traders in this habit of drawing. That's the point of doing all this mess on the chart. Okay, so if you find it a bit too much, do not think that I'm doing it just for fun. I'm doing it to get traders into this habit of drawing on their chart and keeping their eyes on the price. Okay, so now what I'm going to do now, okay, I think I've said enough regarding this. The Elliott Wave theory, it is about day trading with Elliott Wave, and how you can perfectly, okay, understand the language of the price and the Elliott Wave itself. Okay, so you see the euro is returning to the upside, probably retesting the zone and break it, or come back and break it. Not here. So thank you for watching, and we will speak to you very soon. We are the TSTWSYS 008 traders.